Rahul Chadha, Founder and Chief Investment Officer at Shikhara Investment Management, joining us this morning. First up for his view. Rahul, very good morning to you from where we're sitting. It's all about tariffs right now, isn't it?
Absolutely. So I'm sitting in New York, so I'm in the midst of all the action, and the whole weekend's gone reading about these tariffs. Let's see when they get implemented. But the sense is pretty much like what happened with Colombia last week. Hopefully, these are just rhetoric, and the administration doesn't really follow through with that, because else it just completely upsets the business and the consumer confidence in the coming quarters. So that is what is the key worry on minds of most investors.
The way that things look, Tuesday at 12:01 a.m. is when these kick in, which is not too far from now. What are the chances of something being done in terms of a handshake, perhaps, or some kind of, agreement between the countries that we're talking about? Is not too much time to strike a deal. So if that comes to pass, what's the reaction?
Yeah, so I think that would be comforting from a market perspective. Look, because what happens is once these tariffs come with major trading partners for US, obviously everything kind of a little goes haywire in terms of the supply chains were so much integrated between Canada and Mexico that it's going to upset a lot of things. Things may just go in complete slow motions. Businesses may stop hiring, stop investing. So that creates unnecessary uncertainty. So fingers crossed on what this happens. But I think markets may continue to be choppy. We see that in Asia, Nikkei, like the way you guys discussed, is down. We saw Hong Kong, Korea open. All these markets are down anywhere between 2 to 3%. And despite a good budget, I think some bit of a negativity is going to be reflected in India also as the market opens.
Rahul, good evening to you, Neeraj here. And what are you guys at Shikhara thinking about what happens if these tariffs are the first of the many salvos on trade fired by Donald Trump? Does it therefore make risk assets like equities untenable for the time being until some other rhetoric on, or whether this was a negotiating tool and maybe US might also be willing to back down a little bit, comes about? Are the markets going to be under pain?
Okay, so Neeraj, if we look at this, again, the traditional proponents of tariffs like these Devaros or Lighthisers, they're not part of the administration. You see Treasury Secretary Scott Bessent, he's been more in favor of gradual tariffs, if any. They want to keep US growth rates at 3%. They're mindful of how the US market react. And the biggest pain is going to be taken by US consumer. See, I live in US and I see the inflation here. And look, on one hand, Trump administration is calling for Fed to cut rates, and with these tariffs, with all these guys are doing on illegal immigration, pushing those guys out, that just makes the inflation all the most sticky. And somewhere these high rates, the dollar strength is going to play out in growth. Already, we're seeing some signs of weakening ISMs for US services, and manufacturing was holding on because of this domestic manufacturing story. But with these tariffs coming through, I think, like the way I said before, almost all investments go on hold, and which is why it's a negative scenario. But look, we've seen policymakers in the world guided a lot by markets. To quote on a different way, a lot of us were fearing in India that something would happen on the capital gains tax, something would happen on the corporate taxation. But call it because of the falling markets in January, none of those bad outcomes happened, and all we got was a good outcome on a personal income taxation. So that is where the sense is that look, probably a 10-15% fall in the US markets acts as a strong guardrail for policymakers here not to do anything drastic here.
Rahul, okay, so 10-15% in the US would mean a lot for the other markets too. But okay, just one question on India thereof, because I did hear you say that what we got was a good budget. Now, there is an MPC meet lined up too. The belief was that until the MPC meet, and if the RBI were to give out a rate cut, if you will, or some bit of further liquidity enhancing measures, which is the need of the hour, not that the RBI hasn't done stuff till now, that could be positive for the markets. Do you think India, if the RBI were to deliver, do you think India can have an idiosyncratic stability or an up move, even if the world markets were to be lower?
I don't think a up move is possible here, but what would happen is we will fall less. See, RBI has clearly shown its commitment towards boosting domestic liquidity, and I think it's going to be continuation of that. Look, with all these tariffs coming through, and the administration, Trump administration put about 10% tariffs on China. So renminbi is going to weaken on back of that. If renminbi weakens, China is one of the big trading partners. INR is also likely to weaken. With that environment, I don't think RBI cuts rates, but they would provide enough domestic liquidity. So India does the job, and the market's corrected significantly over last 3 months. So I think large caps would be marginally down. They would kind of outperform the global markets on the way down. Mid small caps can correct a bit. See, mid small caps were fairly frothy, and one could not understand the move which happened from late Q4 of last year. So we've seen some bit of that correction. These names have lost 20, 30% or even more from highs. I think they can be down another 15, 20%. Earnings being weak, what the government's done on being fiscally prudent is good from a macroeconomic framework, but what it means is growth is a bit slow in the coming quarters.
Rahul, just one point on, and I'm going a little back in the conversation, where you said that the hope is these tariff impositions on Mexico, Canada, China are rhetoric, and you compare them to Colombia. But now in the case of what happened with Colombia, there was a very clear negotiation of something that the Trump-led government wanted. In this case, he's made it clear, reiterated, and imposed those tariffs without any asks specifically in return. So why would you say that this is rhetoric and there's a chance for it to be rolled back? It seems pretty much that this is done. Retaliatory tariffs have also come in.
Yeah, so I think what happens is if you look at the retaliatory tariffs from Canada, they have targeted the food products and again the liquor which gets exported from US. That hits the heart of the Republican kind of a voter base or the support base. And don't forget, there is a midterm which comes in about 1.5 to 2 years. So clearly, you can see unease in some of the provinces here. We've seen the senators and the governors for the main province here talking about this. So there is going to be a big pushback which comes in the Republican Party also on this, which is why one is hopeful that there is going to be some backing off on these tariffs. Else, if the backing off doesn't happen, then the markets will kind of, in a way, give a strong message to the policymakers to do the right thing. Yeah.
Okay. So interesting. We'll wait and see. We'll wait and see. This gets interesting. Thank you so much, Rahul, for speaking with us. Rahul Chadha there joining us live from New York.